This silver breakout is significant. This is a significant move. Even Darth Silver admits that. If it continues, then I think the answer to your question is silver outperforms and increases my urgency to add more silver to my portfolio. I'm not short, not bearish. I have some. I wish I had more. And I probably will make greater efforts to buy more silver, add more silver if this breakout continues. But if silver is outperforming gold this month because of its industrial side, then more Trump shock in the months ahead as we figure out what these tariffs actually do to the economy would be a headwind for silver that gold doesn't face. And if that doesn't happen, if that's not what's going on and silver leaves the other metals in the dust and there's something very silver specific, shorts being liquidated or whatever.
Silver has captured investor attention with its recent surge above $37, marking the second breakout in 2 weeks and reaching levels not seen since early 2012. This dramatic move has reignited speculation about whether the metal might challenge its all-time high near $50, with many pointing to strong industrial demand, tightening supply conditions, and renewed investor interest as catalysts for what could be the early stages of a significant bull run. However, seasoned precious metals investor Lobo Tiggre of IndependentSpeculator.com urges caution, despite the bullish excitement surrounding silver's performance. Tiggre warns against assuming the metal is on a straight path to $50, reminding investors that the previous breakout above $37 also faltered and led to a correction. His measured approach reflects the volatile nature of silver markets, where momentum can shift rapidly, and previous rallies have often met stubborn resistance at key levels. The recent breakout has been significant enough to impress even the most skeptical observers, with Tiggre noting that even Darth Silver acknowledges the importance of this move. He emphasizes that if the current momentum continues, silver is likely to outperform other precious metals, which would increase his own urgency to add more positions to his portfolio. This perspective highlights how professional investors are watching technical developments closely while remaining prepared to act on sustained strength. Silver's recent price movement represents more than just significant trading activity. It constitutes a crucial technical breakout that could fundamentally alter market psychology. The metal's surge above long-standing resistance levels coincides with unprecedented physical delivery demands on futures exchanges, creating what many analysts describe as a perfect storm for higher prices. This combination of technical momentum and underlying physical market dynamics suggests that the current move may have more substance than previous failed breakouts, as both chart patterns and fundamental supply-demand factors appear to be aligning in silver's favor for the first time in over a decade. Before we begin, don't forget to subscribe, hit the bell icon, and share this video. Your support helps us keep delivering sharp insights on gold, silver, and the markets.
This silver breakout is significant. This is a significant move. Even Darth Silver admits that. If it continues, then I think the answer to your question is silver outperforms and increases my urgency to add more silver to my portfolio. I'm not short. I'm not bearish. I have some. I wish I had more. And I probably will make greater efforts to buy more silver, add more silver if this breakout continues. But remember what we said earlier in this conversation, the move in silver came at the same time as platinum and palladium and rhodium, and they all rolled over at the same time. I haven't checked today to see if when silver went back to 37, if those other silvery metals did as well. But if silver is outperforming gold this month because of its industrial side, then more Trump shock in the months ahead as we figure out what these tariffs actually do to the economy would be a headwind for silver that gold doesn't face. And if that doesn't happen, if that's not what's going on and silver leaves the other metals in the dust, and there's something very silver specific, shorts being liquidated or whatever it is. If this is an unusual time to ask a question like this, David, what I'm saying is we might know in the next week or two, if this continues and it's something unique to silver, then I think that becomes investable. It would change my marching orders, what happens in the next week or two with silver. And if it confirms, that's very bullish, increases my urgency to buy. If it doesn't, then it tells me, let's wait for Trump shock and probably start piling into silver again more about the same time I start buying more copper stocks. In a typical bull market, in all past bull markets except one, silver has lagged gold at first and then more than caught up on a percentage gain basis at the end. The except one was the crash of 2020. Yeah, it's reasonable to say that at some point silver, statistically, the odds are that silver at some point will play catch up and more than surpass gold on a percentage gain basis. But that's the blow off top at the end of the market. So if that's the argument you're making now, that silver is going in that blow off top phase, you're saying this bull market's almost done. I don't see anything in the fundamentals to support that case. And the other thing is silver, as you and I are speaking, and went back over 37, but that's the second time. A week and a half ago or so, it did it before. And there are a lot of silver bulls out there like, yeah, this is it. It's going straight to 50. And I got rotten tomatoes thrown at me for saying, well, maybe, but maybe not, and then it corrected, not in a big way, but it struggled. And I think what you just said in the end of your question is really important. When you see silver and gold moving in opposite directions, that's important to pay attention to. This morning, there was a headline, I think on mining.com, about silver is outperforming gold as Mideast tensions, rise. That makes no sense to me at all. If it's the safe haven bid, if it's fear driving people into safe haven assets, then gold and silver would both be rising. So the fact that it's silver that has the greater industrial side that was moving up at the time while gold went down tells me that it's something else. And the other thing is that if you look at this last month, when silver went screaming up to 37 the first time, platinum, palladium, and even rhodium were moving at the same time. Other silvery, expensive metals, so-called precious metals, were moving at the same time. And then last week when silver pulled back and consolidated a bit, those other ones did too. So it seems to me that the argument here is something is going on. I don't know what it is, but it looks like it's coming from the industrial side, not the safe havens.
The gold market has undergone a fundamental transformation, evolving from a highly volatile asset into a more resilient store of value. Lobo Tiggre observes, this shift is most evident in market responses to Federal Reserve announcements, where unexpected Fed moves previously triggered sharp $100 swings, but today's gold demonstrates remarkable stability, with minor pullbacks quickly absorbed by buyers, reflecting increased investor confidence. This resilience reflects gold's established role as a hedge against multiple macroeconomic pressures, including inflation expectations, geopolitical tensions, currency movements, and supply-demand dynamics. During periods of high inflation or geopolitical uncertainty, investors consistently turn to gold as both a safe haven asset and inflation hedge, creating sustained demand that supports prices even when other conditions suggest weakness. The current market environment exemplifies this stability, with gold holding steady near $3,392 on Wednesday, supported by persistent geopolitical tensions and investor caution ahead of the Federal Reserve's policy decision. Gold is trading just below the $3,400 level, with price action largely range-bound as markets await fresh Fed guidance. Let's get back to the video.
David, gold tends to lead inflation. So arguably, gold going to 3,500 a couple months ago led the inflation expectation that we're seeing now. So, right, I mean, you know this as well as I. If you correlate CPI and the gold dollar exchange rate, the correlation is terrible. It's not quite negative, but it's almost non-existent. And so, because gold tends to lead. So arguably the gold market sniffed this out in advance. And so now that it's here, it's not doing much. And okay, it dropped a bit. It really, if we're anywhere 33, 34, 3,500 in that range, that's a very high gold dollar exchange rate. I like to call it that instead of the gold price, because in my mind, gold is money. And it's like euro dollar exchange rate. It's a Forex question in my view. So I see the fluctuation as minor. I think really these days, what's happening geopolitically, the Trump agenda, not even it's all Trump, but the weaponization under Biden before, the weaponization of the dollar and the central banks around the world diversifying their reserves into gold. These are mega trends that are happening right now, very supportive of gold. And it's interesting that, if we'd had this conversation a year or two ago, a big surprise by the Fed or a big statement by the Fed would probably have whacked gold a lot more. We'd be seeing $100 moves, something like that. But now it looks to me where we're at, the gold market is so well supported. There's such a strong bid under gold that little fluctuations like this, I think so based on the remarks I just made about inflation, high inflation ultimately will be good for gold. If you don't correlate CPI and gold on the wiggles, short term, but if you pull back, this, my favorite chart in this whole question area is the long-term chart of gold since 1971 and the purchasing power of the dollar. And it's a giant X. So yeah, I think that's supportive, but there's also the geopolitical environment. And again, the central bank thing can't be overstated. I mean, I think you and I talked about it when it happened in 22. That was a big deal. And maybe we didn't want to go out and say, oh, yes, this is a complete game changer. Everything's going to be different after this because, once bitten, twice shy on bold predictions like that. But that was a really big deal. You've got not just Russia or Russia and China or BRICS, but you've got central banks of allies even saying, you know what, maybe we should diversify a bit out of the dollar. And sorry, Trump fans, I don't mean to be excessively critical here. It's just he's the guy in the White House, and Trump is upsetting the apple cart with allies. So if you're Canada, say, for example, and your BFF suddenly is not ruling out war to make you the 51st state, do you really want your financial well-being entirely dependent on what's decided in New York and Washington? I think it's prudent for even your best friends to diversify it. So I think this is huge, David. This is a paradigm shift. And maybe the takeaway for this for our gold bug friends out there is that if you're worried about gold having gone so high, and you look at the chart and it's like vertical, it's reasonable after going screaming up through 2,000, 2,500 to 3,500 to worry about a pullback after that. That's what I would normally do. But if the game has changed, if we're no longer in the same context that we were before 22, then there's a case to be made that looking backward too much would be a mistake. Gold it's real money. It's a physical asset that you can own, a financial asset that you can own and you can be long, for which there is no counterparty risk. There is no short against your long. And it's striking to me, David, as you and I are speaking this morning, a video came across my desk of people purportedly in Tehran trying to flee the capital, and they're going to get money out of their ATM, and the ATMs are all dead. There's no electricity. They can't get any cash, can't pay for gas to fill up the car and flee the city. Horrible nightmare scenario. And it was, to me, that was a reminder of why you don't have to be a gold bug and put all your savings in gold and get a golden mattress or anything like that. But if you have a little bit of your savings in gold and silver to make change, in case of the worst case scenario, I sleep better having gold. In a situation like this, we're in a war scenario right now where the US may get drawn in, there could be retribution. And okay, Iran can't defeat the United States on a battlefield, but they could certainly send proxies in to bloody our noses, maybe even on the home front. Who knows what could happen? Scary things could happen.
Gold and silver remain central to market attention as global tensions and economic uncertainty intensify. While gold holds firm near its highs, reflecting safe haven demand, silver continues to respond to both industrial strength and geopolitical shifts. Together, they signal that investor confidence in traditional currency is weakening, reinforcing the metal's roles as stores of value in a rapidly changing landscape. If silver's breakout signals a major shift, are we entering a new era for precious metals? Let us know in the comments. Do you think silver will continue to outperform gold in the months ahead? Don't forget to like, share, and subscribe for more sharp market insights. Thanks for watching.